Ever wondered what a limited company is and why you would want one for your business? Keep watching to find out. Hi there, Chloe Zaytunian here from Rapid Formations, the UK's leading company formation agent. A limited company is a type of business structure that has been incorporated at Companies House as a legal person. As a legal person, it is separate from its owners. This means that the company can enter into contracts in its own name, is responsible for its own actions, finances, and liabilities. The owners of a company are protected by limited liability. This means they're only responsible for business debts up to the value of their investment in the company or what they agree to contribute in their personal guarantees. There are two types of limited companies that can be registered. They can either be limited by shares or limited by guarantee. Limited by shares companies are owned by one or more shareholders and managed by one or more directors. Limited by guarantee companies, on the other hand, are owned by one or more guarantors and managed by one or more directors. Under the law, the same person can be an owner and director, so it is possible to set up a company entirely on your own or with other people. So, let's get started with what is a company limited by shares? A limited by shares company is the most popular company structure in the UK. It is designed for people who want to run a profit-making business, whilst also benefiting from personal financial protection afforded by limited liability. It is by far and away the most popular type of company for small to medium-sized businesses. The directors of the company run the business on a day-to-day basis. Meanwhile, it is owned by its shareholders, with each shareholder's percentage of ownership being generally determined by the number of shares they hold versus any other shareholders. The degree of liability these shareholders take on is limited to the unpaid amounts on those shares. This is normally just the nominal value of the shares, which itself is often just £1 per share. Any profits the company then makes can be distributed amongst the shareholders. Here again, this is usually done in proportion to the number of shares each shareholder owns. That's a brief rundown of what a company limited by shares is. So why would you form one? There are a great many reasons why you would do so, but here are three big ones. Firstly, you might do so on a more fundamental level of wanting to start your own business for the purpose of making money as a source of personal income. A company limited by shares is the vehicle that you use to help achieve that. Secondly, this type of company structure will enable you to sell a percentage of the business to other people in the future, if you wish. This is because shares representing portions of the company can be sold off individually or as a group. It is therefore much easier to sell parts or all of the business. And thirdly, a limited company structure creates a professional image and improves credibility. A lot of people and other businesses prefer to deal with limited companies rather than unregistered entities such as sole traders. Indeed, some companies will only enter into business with other limited companies. Moving on, let's consider the other type of limited company structure, a company limited by guarantee. This type of business structure is mostly used by people who want to set up a non-profit organization or charity, where the owners usually reinvest surplus income into the business, rather than taking any profit for themselves. Like with companies limited by shares, limited by guarantee companies are also a separate legal entity, meaning they have their own distinct legal personality and are responsible for their own income, assets, debt, and liabilities. There are no shareholders because this type of company does not issue shares. Rather, there are individuals called guarantors who guarantee a fixed amount of money which must be paid to the company if it can't afford to pay its bills. Control of the day-to-day affairs of the company is placed in the hands of the directors, although it is not uncommon for guarantors to also be the directors in smaller companies. So why would you set up a company limited by guarantee? Again, there are plenty of reasons why you might choose this type of company structure, but here's a couple you should be aware of. In the first instance, you plan to set up a charity or not-for-profit enterprise, for example, a sports club, association, cooperative, or social enterprise. Profits will usually be kept in the business for the purpose of achieving and/or promoting its non-profit aims, and will not be distributed amongst the guarantors. Secondly, the incorporated status will improve your organization's professional image and credibility. Others are more likely to invest in or work with a non-profit that is set up as a limited company. Now that we have established what a limited company is and taken a little look at the differences between limited by shares and limited by guarantee companies, let's now discuss the more general advantages of operating a business under a limited company structure type. The most significant advantage for most people is limited liability. Unincorporated businesses like sole traders and traditional partnerships place unlimited liability on their owners because there is no legal distinction between the business and the individual. All business finances, debts, and liabilities are the responsibility of the owners. If a sole trader is sued or their business becomes insolvent, their personal finances and assets are at risk. This is not the case with limited companies, where the total liability has a set limit. Additional benefits of a limited company include tax efficiency, credibility and professional company image, greater opportunities for raising capital. One person or multiple people can set it up and operate it. Perpetual succession, where the company exists beyond the departure or death of its members. And protection of the company name, meaning no one else can register their company under that name. With all that being said, there are a few disadvantages to be aware of if you use a limited company structure, including additional filing and reporting requirements, more complex accounting and taxation requirements, potentially higher administrative and accountancy costs, and company information is disclosed on public record, including details of directors, members, and people with significant control. However, more often than not, limited company benefits far outweigh any of the perceived disadvantages. To finish off, let's take a look at how to register a limited company. Rapid Formations offers a range of online company formation packages for companies limited by shares. We also have a tailor-made package for companies limited by guarantee. The application process is simple and affordable, with prices starting at £52.99. Follow these 4 simple steps to register a new company today. 1. Choose a company name. 2. Purchase one of our company formation packages. 3. Complete the online application form. 4. Submit your application to Companies House. Within 24 hours, your new company should be registered at Companies House. You will receive your incorporation documents immediately by email, and you can start trading whenever you like. So there you have it. We hope you have found our introduction to limited company structure useful. If you have any questions, please leave them in the comments section and we'll get straight back to you. In the meantime, we have included several useful links in the description below. Finally, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help, and we can't wait to hear from you. Thanks for watching. See you next time.